Now I want to look at materiality. At the start we have a setup, okay? And the idea behind the setup is firstly we want to know what exactly we want to compare. So you're given a choice here of up to 3 different sets of figures that we can compare. And you'll see below here in Action 2, some of those figures are starting to stick out, such as my sales, my expenses, my gross margins, income after tax. That information is starting to populate in the bottom here. However, what do we want? Here I've got opening, prior 1, prior 2. Now we have a lot of clients who will import into Draftworx's opening balance, literally the opening balances at the beginning of financial year. Then they will import the transactions for each month because maybe they're doing monthly management accounts, but that option is available, and in that case you actually want to look at the final figure rather than the opening, and that's why we've created the option here to go and choose which base we want to use. So I'm going to go and click on Final over here. It's going to make that assumption that I need to use Final. Okay, then this cell changes to Final. Okay, so this is now the final figures. The other thing that has happened is that this cell here has gone a bright red. This question is asking which set of figures of these 3 do I actually want to use for my estimates, okay? And at the moment it's still saying opening, so I need to update that, and that's why it's coming out red. If I don't, you will see further down, I just want to show you quickly, you actually end up with a whole lot of #NA errors sitting in the possible planning materiality cells here. And that's because I haven't made an appropriate determination above. So once again, this is where, for the first time, I think we're seeing this bright red come up. This is an error, we need to go and fix it. So I can go and click on Final. Okay. The other thing that we are able to do automatically is extrapolation. So if you have a financial period that isn't a full 12 months, I'm going to go and change this and say, let's say we just had a 10-month trial balance that we're working with here. Go and use the drop down, and I'm going to go and select 10, and you'll see immediately that the sales have changed from 215 million to 258 million. And that's appropriate. If you've only got a portion of a year, you can extrapolate that in terms of trying to work out what my materiality is. However, we don't extrapolate the balance sheet items. We only extrapolate the income statement items. We can't say that because after 10 months we have 10 million PPE that after 12 months we'll have 12 million. It doesn't work on the balance sheet. It only works on the income statement. It's an estimate. At the end of the day, materiality is an estimate. You can also go and say, well, this financial year was 15 months rather than 12, so we actually, in terms of materiality, need to tone it down a little bit, and then it also reduces that now to 172 million. So that automatic extrapolation is built in. One of the other nice things you can do, I don't have it here, but you could be using an opening and an interim figure and a budget as your basis. I don't have those figures, but it'll automatically allow those comparisons because you can import all of these figures into Draftworx into separate columns. So now we have our bases. We go and take a look at our bases and we decide, yes, we are happy to use Final. What is the broad nature of the entity? This is just to determine which sort of ranges of materiality we need to use. So I'm going to say this is profit orientated, and very importantly, please document, and this is where an audit file can fall over if you're not appropriately documenting your professional judgment, because this is a professional judgment call. At the end of the day, it's very hard for a reviewer to come around and say your professional judgment is wrong, because your professional judgment is based on you, your experience, your knowledge, what you've done. But if you don't document that professional judgment, it does give scope for a reviewer to come in and question. So please, again, go and document. Action 1 here now talks about who are the users of the financial information. Okay, this could be SARS, and let's be honest today, who's the major user of our financial statements? It is SARS and it is the bank. Those are the guys that really look at our financial statements. Many of the clients I've dealt with are actually, they don't know really what all the notes are all about. They just know they have to have this audit. They don't really like paying for it, but they know they need to get it. but the users are SARS. We need to submit SARS to SARS, our financial statements quite often. We need to submit to the bank. And for each of these, we need to go and consider what impact this is going to have on my materiality. Now, if the bank just uses the financials for an annual review of their facilities, it's not a major problem. The client is suddenly trying to take out a 50 million loan and the bank is going to base it on these financial statements. Well, that higher my risk profile of the client and I maybe need to reduce my materiality. So go and document who those users are. You could maybe even include the CIPC. Nowadays, you should be submitting financials to the CIPC. And in the next year or two, that may even be via an electronic format called XBRL, which is going to make life very, very interesting, because SARS will also accept XBRL financials. Then we've had a look at the bases. Action 2, you can go and add your own. Please complete as necessary. And then in Action 3, we actually go and choose what base we're now going to use. And this is where that profit-orientated came from. You can use another. The percentages pulled from the IFAC guide, but once again, please be aware that this needs to be in line with your firm's own policies. If your firm says 1 to 2% of revenue, then please stick to 1 to 2% of revenue. Don't go for 3%. All right, I am going to go for 3%. Just to show you, at the moment, I can't say 4. It does give me a validation error. Okay, we cannot go higher. 6.45 million is the possible materialities, but you'll see that the actual materiality figure here stays 1, irrespective of what I do here. Materiality is a judgment call. We're not going to make this judgment for you. Please go and make the call yourself. In this case, I would probably say about 6 million, and that's my materiality. Okay. I cannot say 7 million. Once again, I'm going to get a validation error because 7 million is greater than the maximum of these items. Okay, so you retry it. Let's go and make it 6 million again, and it'll accept it. Once again, please document reasons for your materiality. Show your professional judgment throughout the process. Action 4 allows you to go and specify a specific materiality. Let's go for argument's sake. In this case, we want a higher or lower materiality value for our total assets. Okay, I can go and say total assets are 1.2 million, and I can then pull that figure out elsewhere within my file. What we won't allow is a materiality higher than my overall materiality. Specific materiality has to always be lower, so please bear that in mind. And once again, we do put in validation rules to prevent inappropriate answers at this juncture. Okay, I'm going to leave that blank. I only want that 900,000 to use later on in the training when we get to sampling. The last action here is about my clearly trivial threshold. Now, I found some users are making use of this. Some users aren't actually implementing trivial thresholds. The theory behind a clearly trivial threshold is any error that I find within this audit which is under 60,000 Rand, I may still report this. So it's not that I'm not going to report it to the client, but I don't need to carry this on my shared summary of identified misstatements on my overs and unders schedule. So if I find a VAT error, let's say, of 59,000 Rand, I'm going to report it to the client because it is pretty important to let them know that this kind of error has happened. However, I don't need to put it on my overs and unders schedule. It can just be a reporting point that I carry through in my management accounts. So that's what the clearly trivial threshold is. It's basically there to prevent your audit clerks from finding 15-cent VAT errors and trying to put it on the overs and unders. We don't want these trivial amounts to cloud our reporting. We don't want to overthrow it with unnecessary stuff. We want to focus on the important figures, and that's why we say between 0.5 and 1% of materiality becomes this clearly trivial threshold where we're not worried about this adjustment for our overs and unders. Yeah, that's the distinction. It's for our overs and unders. And once again, we go and document our conclusions on this working paper.